Tim Biggam is lead option strategist, Delta Derivatives. He's down at the Seaboat. Tim, nice timing today. Good to have you on the show ahead of Apple. So bull me up here, right? Because we don't accept bearish trades in the market right now, Tim. Sorry.
Yeah, absolutely. And I'm just looking, as George alluded to, the PE multiple at an extreme. Price to sales, even at a more extreme, we're well over 5 on a price to sales basis for the largest company in the U.S. It comprises now 5% of the S&P market cap.
Oh boy, this sounds bearish.
Bigger. Yeah, well, it's guardedly bearish. I'm certainly not going to jump in and take it outright short, but kind of the chart pattern, that 323 and change intraday high, I'm kind of going to set my strike just above that, at least. If it breaks through there, I know I need to cover, but I'm guardedly bearish on Apple. Given the fact we see the stock up today, we've seen all the analysts kind of upgrade it. If you will, all the good news is kind of baked in here. Valuations, as we talked about, at extremes to say the least. So unless it's a absolute knock it out of the park number, and the coronavirus may turn out to be Corona Light, but I think it'll still have an effect here. So I'm just willing to sell a rally here, selling the 325 calls that expire Friday after earnings, hedging with the 327 and a half, get about 60 cents. So like that kind of risk reward trade-off, about 30-some%.
All right. So look, it's not like you're saying Apple's going to implode tomorrow, but you're just not ready to bet on this thing getting through, getting much further than it already is, because you're going through this by selling the call. But you've also got yourself covered because you're buying the one further out.
Yeah, absolutely. Again, really not looking for pretty much fireworks on Apple here. We saw that big pullback yesterday, relief rally today. So I think Apple may just kind of drift around here. Certainly with the Fed hinting at another rate cut, stocks will be supported once again by the uber easy money policy. So I think the downside, unless they absolutely have a horrible number, or guidance more importantly, will be limited. But I think the upside will as well. That yield that looked attractive a year ago is starting to look a little less attractive given that massive rally in Apple. So I'm just willing to be a seller on rallies and perhaps even a buyer on a big enough dip, more of a trader's mentality here in Apple. I like the fact that IV is a little higher in front of earnings given what we've seen in the stock market over the past couple of days, so I can get a little bit bigger premium for that same cushion.
It is. Over the last year, we're at this 96th percentile, so about as expensive as options have been for Apple over this past year. Nice, Tim. Good as always here. We got to run, Mr. Biggam. Thank you. Lead option strategist at Delta Derivatives.